Greetings, members one and all of the Salivation Nation. How much gold and silver should you own? Coming from a mainstream media source, CNN. This ought to be interesting. Let's explore. Before we get into this article, let's talk a little bit about what the metals are doing right now. They're up a bit. Gold is up to $13, $14, $19. The silver's at $15.46, relatively flat. Palladium is at $848, and palladium is still riding high, but it's down substantially from its $1,600 high to $1,567. So it is quite interesting. We're seeing the moves of metals upward. The Dow is down over 400 points lost today. There's some a little bit of fear out there and people are skittish because of what's going on in the Eurozone. The economy is down, and some of the numbers coming back domestically as far as I think manufacturing, and some of those numbers came lower than expected, even outshining or taking over what is seen as a more impressive housing market as of late. But it is fascinating to see. That brings us to this article here from CNN Business. How much gold and silver should you own? Now, it's not very common for CNN to really talk about gold in this way, especially considering. But this is quite interesting. This is from CNN Business, and this is by Paul R. LaMonica. And he says that for someone like me that can't afford to buy an ounce of gold, what would be just as good owning several ounces of silver versus a half ounce of gold is the question posed to CNN Business. He says that gold trading for more than $1,300 an ounce is a much pricier investment than silver, which currently costs about $15 an ounce. In other words, you could purchase more than 40 ounces of silver for the same price as 1/2 ounce of gold, meaning, recognizing the over 80 to 1 gold to silver ratio there. Investors treat gold more like a currency than silver, a metal that has many more industrial uses than gold. So if you want to buy silver, don't necessarily expect it to perform in tandem with gold. And though I agree on principle with that, typically silver does follow gold. It's just following it at its current ratios. Silver prices are actually down nearly 25% over the past 5 years, while gold prices have been relatively flat. Silver has been hit harder because investors are worried about slowing global economic growth. But both metals have underperformed the broader stock market. Still, investing experts say that gold, silver, and other precious metals like platinum and palladium could make sense as part of a broader investment portfolio. And again, they're using that word investment, and I caution against that, because I think that is a misleading description of what silver and gold are meant to do. Many people own them simply to hedge against big pullbacks in stocks. They're also viewed as a good alternative to government-backed currencies, which tend to fluctuate more with central bank decisions on interest rate. Investors view Bitcoin and other cryptocurrencies as assets that could behave similarly to gold and silver. And that's an interesting statement. And I think the only similarities between cryptocurrencies and gold and silver is that are essentially not controlled by the government. Now that the U.S. Federal Reserve is apparently done raising interest rates for the foreseeable future, many predict actually that they probably won't raise them at all for the rest of the year, and went from several to just one and now none. But he said that should bode well for gold and silver when rates are low. Metals are set to be primary beneficiaries of the Federal Reserve simply catching up to futures market price for easing. Futures hikes are unlikely, said Bloomberg Intelligence senior commodity strategist Mike McGlone in a tweet Friday. But silver might be more attractive than gold right now, and it's not just because it's a heck of a lot cheaper to purchase. Many commodities analysts closely follow the ratio of the price of 1 ounce of gold to 1 ounce of silver. It's flashing a buy signal. Historically, there have been only a few occasions that the gold to silver ratio traded above 80, said analysts at Blanchard, a precious metal investing firm in New Orleans, in a recent report. The gold to silver ratio stands at 85 right now. That signals that silver is dramatically undervalued, said the Blanchard analyst said. That said, if you're going to buy gold, silver, or any other metals, it's probably easier to do so through an exchange-traded fund that tracks the price of the metal instead of pulling a Scrooge McDuck and actually purchasing bars and coins to swim around in. And there's where it gets off base. Because they want you to invest in the paper markets. The SPDR Gold Shares ETF GLD is one of the largest funds in the world with about $33 billion in assets. For silver, there's the iShares Silver Trust, SLV, which has nearly $5 billion in assets. And if you're more comfortable owning stocks instead of the metals, there are the ETFs for gold, GDX, and silver miners, SIL, as well. The industry is in the midst of a major wave of consolidation, and mining stocks could benefit from more merger speculation. So there you go. The article was, it was relatively on target with some things that are a bit simplified explanations about silver and gold and holding some, but they say to get it in the form of exchange-traded funds and not be a Scrooge McDuck and hoard the barbarous relic, but rather get it in exchange-traded funds, futures. And, the thing is, when you do that, more than likely you're not testing the cash-out option, because when you do cash out, you are literally just going to cash out. You're not going to actually obtain silver or gold bars in exchange. And with this coming from a mainstream media source, you kind of question why they would mention this at this particular point in time. And in my view, it's always been good to question, especially considering what's happening. Not necessarily means that it's going to level out to anything per se, but with all what's going on, we were talking about Basel III and whether or not that's going to be a big deal. When you hear about Russia obtaining massive amounts of gold and other central banks just continuing to take in and add gold to their Federal Reserve or to their reserves. And of course, you hear about other things in the economy, and there's any amount of triggers in the economy that could have a domino effect, and we could see a significant downturn. But who knows? We may not. But it is interesting that it's being mentioned now, and it's being mentioned here on CNN Business, which is not really known for articles such as this, and obtaining this question here. But my feeling is that this question here is related to holding the physical. It says, again, for someone like me who can't afford to buy a full ounce of gold, would it be just as good as owning several ounces of silver versus a half ounce of gold? To me, that's a physical holding question. Of course, the answer is to get yourself an exchange-traded fund, which, again, will not be cashed out. But with the prices where they're at, who knows what kind of movement we'll see between silver and gold. But really, in the end, the guy doesn't really answer this question: how much gold and silver should you own? He basically is saying that if you're going to buy gold or other, it's easier to do so through an exchange-traded fund. But even as such, it doesn't tell you how much of those ounces in exchange-traded funds you should get. So it's another quite an interesting and fascinating report here, because it doesn't really answer the question. And my guess, if the person asking this question were to read this article, they're not going to be satisfied with the answer, even if they were agreeable to making it through the exchange-traded fund. But as is the case, many of these kind of entities, they're too short-sighted. They're talking about really more the properties of gold and some of the reasons why they haven't been performing, or why they would or could perform. But I think they're getting some things wrong here, and they also don't really answer the question. So post your thoughts below. And what is your answer to this question? To me, I think it's different for each person. I mean, you can spend. You can look at what you're available to spend per month, and of course, this does talk about it up here at a certain time. That there's certainly as a part of your portfolio. Could make sense as a small part of a broader portfolio, but that doesn't really give you much of an answer. It just says to do. Now, some people say between 5 and 20%, which is a big spread between the two. And it's what you're willing to spend and to get. But my view is if you can afford to do so, to grab, some people say 1,000 ounces of silver, 10 ounces of gold. It's there's the numbers that are out there that I think if you could find something that could really protect yourself, depending on how wide the economic downturn could be and how long it could last, if you need to sell or use it for barter or trade, it's any number of different factors that could come into play, which would affect those numbers. But interesting article indeed from CNN. Post your thoughts below. Would like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.